Assalamualaikum warahmatullah and welcome everyone. In this video presentation, we will be discussing biological assets under MFRS 141 Agriculture. Before we go into the standard, let's go through the overview first. As we know, in accounting standard or accounting in general, three things matter. First, recognition. When to recognize and which element should an item be recognized as. Second, measurement. At what value should we recognize it? And third, disclosure. We are quite clear on the recognitions, and for the disclosure, we can simply follow what the standards requires. But for measurement, this is where the challenge is, especially for agriculture or biological assets. Now imagine that we have plantation, either palm oil plantation, coconuts plantation, fruits farm, or orchard or flower farm. How do we put values to these assets? Imagine we have animal farms, livestock, and poultry farm. What value should we record at every stage of their life? And then we have aquaculture. For now, for aquaculture, we still refer to MFRS 141, but a specific standard is in the pipeline as aquaculture do have different complexities. The standard recommends two values, cost and fair value minus cost to sell. Why these two values, you may ask? Well, as we know, an asset is all about future economic benefits. In this case, what is the benefit that we can get from it? Basically, we should get the benefit from selling them at whatever stage. If there is a market, there must be a price. Therefore, we're looking at the market value that we can get from all these assets, thus fair value. However, what we can recover is net of cost, thus fair value minus cost to sell. But can we be sure that there will always be a market price for them? At times, there might not. So if that is the case, we can always fall back to their cost, thus the two values. Now that we know the choices of value, how do we make the choice? Easy. The one question that we need to ask is, does fair value exist at that point in time? If yes, record at fair value minus cost to sell. If not, record at its cost. So in order for us to know when to record fair value or cost, we must really understand the life cycle or the growth of our biological assets. Take an example of a chicken. From egg, we got chick, then youngsters, and mature hen or roosters. For plants, we might start from seed to seedlings with leaves to a young tree, then matured tree, then it grows fruits. And for a cow, from a newborn calf to teen calf, a heifer or calf to matured cow or a bull. Different stages of these assets' lives will have different market values. Some have no market value at all. For example, seedlings with leaves. Most market exists for young tree but not seedlings with leaves, as it is still in a quite sensitive stage of life and might not make it through. And a newborn calf, is there a market for that? How about the cost? How about fruits on trees? And remember this, we also record based on what we want to sell it at. For example, we have eggs, but we are not selling eggs. Instead, we might be intended to hatch and have chicks so that we can sell the chicks, or let them grow to be adults before selling them or selling their meat. Poultry, that is. So we have choices and decisions to make. I hope by now you get the idea. So going back to the standard, in this presentation, we will be talking about its scope, definitions, very important, recognition, measurements, and disclosure, as well as a few common questions. Just for a note, for a while, all agricultural activities and produce was treated under MFRS 141, where all of them are measured at fair value minus cost to sell for initial and subsequent measurement, or at cost. Then later in 2014, another option was added. That is, for bearer plant, the plant itself must be measured at cost and treated using cost model as in MFRS 116. Let us now look at the scope of the standard. The standard applies to biological assets, which is defined as living animals or plants. So it covers also animals and beings in water. However, it also makes an exception of bearer plant. We will discuss bearer plant when we discuss definition of terms later. This standard also applies to agricultural produce, which is defined as the harvested produce of biological assets. If you notice, it says at the point of harvest, which simply means that the agricultural produce at a point where it is ready to be harvested. And when the agricultural produce is harvested, and thus harvested produce, it will be treated under MFRS 102, now that it will become your inventory instead. And finally, it also applies to government grant, which specifically related to biological assets. Other grants will be covered under another standard, accounting for a government grant MFRS 120. To make it clear, the standard shared some examples. So we have three distinguishable categories here: biological assets, agricultural produce, and products from the harvesting activities. For example, we have sheep as the biological asset, and if our intentions of raising them is for their wool, so the wool will be the agricultural produce, and from the wool we could turn it into yarn and carpet as product. But if our intention of raising them is for the meat, then perhaps the agricultural produce would be the carcass. That is, after slaughtering them, we will have their carcasses, and from it we could make meat products like lamb sausage and frozen lamb shank. We can also have tea bushes like what we have in Cameron Highland, so the bushes will be our biological assets, while the pig leaves or the harvested produce of the tea bushes will be the agricultural produce, and from it we could have tea. Other examples: if we have oil palm plantation, oil palms will be our biological asset, the picked oil palm fruits will be our agricultural produce, and from it we can process it to get palm oil. However, the standard also reminded us that some of these examples could be transferred to MFRS 116 as they fulfill the definitions of bearer plant. We will discuss this further later. Having said that, this standard does not apply to land related to agricultural activities, whether the land where you have your plantation or land where you raise your livestock. We're only concerned about the biological assets on the land. So land will be treated under MFRS 116 or MFRS 140. It also not applies to bearer plants, of which it will also be under MFRS 116. Or if we have government grant, but the grant is meant for the bearer plant, thus it will be treated under MFRS 120, the dedicated standard for government grant. Any intangible assets related to biological asset should also be referred to its dedicated standard, MFRS 138, and not this standard. And any rights of use assets from lease should be referred to MFRS 16, leases. Before we discuss the treatment, we must first make sure that we understand the terms used in the standard to ensure we are talking about the exact same thing and have the same understanding of terms used. First, the agricultural activity. It refers to the management by a firm of the biological transformation and harvest of biological assets. Thus, agricultural activities cover both transformations of our animals and plants, as well as harvesting of those animals and plants. Both activities must be for a reason of selling the produce or converting the produce to a product, as we mentioned previously, or to another biological asset, like from eggs to chicks or from seedlings to young plant. So if a company planted varieties of flower plants and later harvests those flowers to decorate its offices, the management of the flower plants is not considered as agricultural activities under the standard. The second definition is biological transformation. Now the keyword here is transformation. It simply means biological changes of the biological assets where it becomes taller, bigger, fatter, or degeneration of biological assets where animals are becoming skinnier because of sickness or plants dead because of diseases. It can also be a procreation where a cow bearing a calf or hens hatching eggs and have chicks. Thus the changes will result in either changes in quality of the biological assets or quantity of the biological asset. The third one is harvest. Harvest is simply referring to the detachment of produce from a biological asset like harvesting banana fruits or harvesting carrots, or the cessations of biological asset like in the case of livestock slaughtered for meat. We can also understand here that the management of biological transformation and harvest of biological asset would include, for example, for plantation, doing the seedling, preparing the land, watering the plant, applying pest control, nurturing the plants by applying fertilizer, and so on, until the day the plants bear fruits and the fruits are ready to be harvested. The harvesting activities is also included as part of agricultural activities. The significance of this is that when we already identify activities under agricultural activities, it will be easier for us to record the costs related to agricultural activities, and perhaps record separately those not related to agricultural activities. From the definitions of agricultural activity, some common features can be identified. First, capability of change. Living animals and plants are capable of biological transformation, thus they change from one stage to the other. Second, management of change. This refers to facilitations of biological transformation by enhancing or at least stabilizing conditions necessary for the process to take place. For example, managing nutrient levels, managing the moisture, temperature, fertility, and light. Such management distinguishes it from other activities. By emphasizing on management by an entity, it eliminates any possibilities to consider fishing at sea as agricultural activities, since no one company or group of people actually manages the biological transformation of fishes at sea. But if you rear fish in your own fish pond, then that will be included under management by an entity. Another non-compliant is trees in the forest. If you do logging in the wild forest, or in short, you are doing deforestation, it will not be considered as agricultural activity because you are not the one managing the biological transformations of the trees. But if you own a piece of land and you plant your own trees to be harvested as timber, then whatever you do from planting to harvesting can be considered as agricultural activities. The last one is measurements of change. The change in quality or quantity due to biological transformations or harvest is measured and monitored as a routine management function. So an entity almost always needs to measure the changes in its biological assets. Now, since the standard should not be applied to bearer plant, it is important for us to understand what bearer plant is. First and foremost, bearer plant must be a living plant. then it should be used in the production or supply of agricultural produce. The plant must also be expected to bear its produce for more than one period or one financial year. And finally, the plant itself should not be sold as agricultural produce, except for incidental scrap. So the apple tree here can be a bearer plant. Why? Because it produces agricultural produce, which is the apple fruits. It could bear apples for more than one period. That means we only plant it once, and it has many cycles of fruits bearing. And finally, farmers do not plant apple tree to cut it down and sell apple tree wood, but to sell its fruits. So it is unlikely that the tree itself would be harvested and sold as agricultural produce. However, as stated in 5b, if at the end of the apple tree's useful life, where it can no longer bear fruits, you decided to cut it down and sell the wood from the tree, that is incidental scrap sale, and it does not deter the apple tree to be recognized as bearer plant. Also, if you have bearer plant, the fruits on the bearer plant will be considered as biological asset, as stated in 5c. So for example, if you are apple farmers, at the earlier part of your plant's life, you will have only bearer plant, and recognize that under MFRS 116. At a later stage, when the trees started to bear fruits, you could then recognize the fruits as biological assets under MFRS 141. With this definition, we can conclude that non-bearer plant would also include those annual crops like tapioca, maize, and paddy, and those plants that are cultivated to be harvested as agricultural produce like timber trees for its timber. Even though within the definition it says bearer plant must be a living plant, when we do the disclosure, the standard actually refers to a more general term that covers both animals and plants, which is bearer biological assets. This indicates that even the definition is referring to plant, in substance, it includes other living animals as well. Now, can you think of any other bearer plants other than this apple tree? There are a few other general definitions included, but I will just highlight a few that need emphasizing. First, cost to sell. It refers to any incremental cost directly related to the disposal of an asset, excluding finance costs and income taxes, because these two will still need to be paid or incurred regardless. Second, a group of biological assets. It refers to an aggregation of similar living animals or plants. So whenever the standard mentions a group of biological assets, it must be from a similar type of animals or plants. Third, fair value. This is just a reminder to us. Fair value refers to the price you receive to sell an asset or to settle a liability in an orderly transaction, not under the table type of transactions or in favor, between market participants at the measurement date. Fourth, government grant. This definition must be referred to its original standard, which is MFRS 120. It is an assistance by government in the form of transfer of resources. Now the word resources indicate that it may not be just ringgit and cents, but also other type of resources like fertilizers, seeds, or young trees given for free. Mostly, government grant will come with certain conditions that is attached with it to ensure that participants is using the resources as it should. So based on the definitions that we have discussed, in short, we can conclude that biological asset has two main categories. We know that biological assets can be plants or animals. And we also know that it can be either consumable assets or bearer assets. For consumables, these are those to be harvested as agricultural produce or sold as biological assets. For example, we have wheat or paddy for rice, cattle for beef, and chicken for poultry. For bearer assets, it bears produce over its productive life, which is more than one financial year. Example of it would be grapevines that produces grapes and dairy cows that are raised for its milk. For these examples, grapevines and dairy cows are treated under MFRS 116, while its produce, i.e. grapes and milk, will be treated under MFRS 141. For the recognitions of biological asset and agricultural produce, the same rules apply. They can only be recognized if the benefits from them, i.e. the future economic benefits, are probable and can be measured reliably. Plus, they must be controlled by the reporting entity. This to ensure that they have the rights to the expected future economic benefits. Now we might ask this question: when should we recognize the agricultural produce on bearer plant? Now remember this, fruits on fruit tree is a biological asset. The moment that the fruits are harvested, it becomes agricultural produce. So we want to know, when should it be changed from biological asset to agricultural produce and then inventory? Basically, there is no direct guidance from the standard, but PwC believes that agricultural produce should be recognized immediately after harvest. So, in our record, biological assets will change to agricultural produce once harvested. And by referring to the recognition criteria, we must also assess the future economic benefits of it. Is there any change in value from biological asset to agricultural produce? Here, we will need to recognize any changes in value, as in any gain or loss from changes in value from biological asset to agricultural produce. And be sure to also fulfill the other recognition criteria. Whatever we want to recognize, make sure the value is reliably measured and not just from guessing. The best way to deal with this question is to always refer to the entity's policy.